I just we had a little bit of technical issues. That's why we're starting just a few minutes late, but want to make sure that you guys can hear us, see us, and everything is okay. So for those of you guys who are on, if you could just give me a thumbs up in the chat or a Y in the comments, I would appreciate that, just to make sure that you can see and hear everything that we got going on. So I know there's a little bit of a delay, so I'll wait for that. I'm also going to look at somebody in here. Orlando, can you hear us? We good? Okay. So we tested it here. We should be good, but hopefully you guys can hear that as well. So sorry about starting a few minutes late, but hey, I got our John with us here today. And John's going to be kind of going to help us out a little bit today and talking about trading. So if you guys are new to trading, you're going to love this episode because we're going to kind of get back to the basics. Get back to the basics. I know a lot of times when we trade, sometimes our journey in trading doesn't necessarily go as well as we'd like it to go. Right? And so sometimes we need to step back and get back to the basics and to kind of understand and realize a little bit what we may or may not be doing wrong, and just kind of get back to the basics and understand where we need to start and what we need to look at and what we need to cover. So with that, I asked John today to record his trading session and how he did in the markets today, and we're going to kind of go over that a little bit. And right out of the gate, I noticed just a couple things that can not only improve his trading, but yours as well. So like I said, if you're new to trading, you're going to love this. If you're not, and you can see some stuff too, go ahead and post in the comments on what you would do as we ask questions. And so, and feel free to ask questions yourself. So anyways, I like that, Merrick. John Wayne is in the saddle.
Oh, that's great.
You remember. They call me the Duke, right?
Got fans already.
All right, so we're going to go ahead and if you guys can hear John too, let me know if you guys are having issues hearing John. I guess we had a little bit of technical glitches this morning, but I think we got them resolved. So let's go ahead and kind of dive in. I want to make sure my pin is working and I got the right. No, let me just tone that down a little bit. Okay, we are good to go. All right, so well, that is hard to see, and so if I'm having a hard time seeing it, I'm sure you guys are having a hard time seeing it. So let me see if I cannot just quickly change the display settings and do this. Raise that resolution up a little bit. All right. So and then bring this down. All right. It's still a little fuzzy. Well, more fuzzy than I'd like it to be. All right, so you can see this. This is his session from this morning, and so we're going to start this, about 4 or 5 minutes in. You can see he's already up about 1% on the day, and this is where he kind of starts getting trading a little bit. And so one of the things that I noticed right out of the gate, or actually, John, why don't you're looking at the Euro Audi AD right now. Okay.
Yeah.
And so what are you thinking right now as you're going through these trades?
My experience has been that the US dollar and euro pair kind of starts to slow down around 8:30 or 9. It was about 9:52 here. So I found, like, in my own little pea brain head, I'm like, okay, like, so if the time is like, because like the market's done in Europe, I imagine by that time.
Okay.
Because it's like 5 o'clock. Because around 3 o'clock, everything starts slowing down. So I'm thinking, like, what areas coming into the morning? So I figured, well, Australia, Canada, Australia. So I try to trade back in time a little bit.
Okay, makes sense.
Yeah.
So it also looks like what you're doing here is you're kind of jumping around to 3 different pairs: the Euro USD, the Euro Audi, and the Audi CAD. Is there any particular reason why you like those three pairs? Why you chose to trade those three pairs today? Any reason?
That's the three that I mostly trade with. When I first get into work, I'll start on the US or the Euro USD, and then at about 9:30 when the Euro usually stops being active, then I switch over to the Aussie CAD and the other two. Really, because like I've tried New Zealand, Japan, I've tried a bunch of different ones, and I've just had more luck with the Australian dollar.
Okay. And I love you made a comment that not everybody gets to do, but guys, wouldn't you love to have a job where you get to work and you start trading?
I have my regular job, but I can trade on the side for sure.
So actually, we encourage that here when at the Apiary Fund. You look around, and almost every single person that works here has two monitors. Their trading monitor on one side and their work monitor on the other, right? And so what a great opportunity and environment that's created here, where you not only get to work but educate yourself about trading at the same time. Right?
Yeah.
So. All right, so take me through. You got a few trades placed on here. You went back to the Euro USD. You got a few trades placed here. It looks like you are in some shorts, thinking that you're going to see a little bit of a downtrend right there. Mm-hmm. Is that? And so you're drawing that line right there is kind of like your trend line. It has a trend line, but are you using it as such?
For me, it's I don't know. See, this is where this is going to be kind of helpful for me today, because I'm intuitive aggressive, and so sometimes I don't know what I'm doing, but I'm like, I'm going to do it anyways, and I'm going to win.
So I'm going to jump in and do it.
So really, like, I'm using the tools available to me in the best way that I can to, I don't know, like I need to like paint things out, and so like drawing on the chart as much as possible helps me. Okay. I'm trying to cultivate a better, aptitude for like methodical and analytical styles of trading. So
one of the things that I'm noticing right out of the gate, and it's kind of what I've reviewed this, is you're not using, you're looking at just a little micro view, right?
Yeah.
So you're not looking at the whole view. And so you have right here, you have the Aussie CAD at the 1 minute chart. But over here on your historical view, or what I like to do is kind of put my wide view to the right, which is right here, and then my small view. So here, I'm going to just put a W for wide.
Yeah, I need to get better using that bigger chart.
And then here, you're going to here's your zoomed in view. Does that make sense?
Yeah.
And so if you use these two views in relation to one another, you'll find that it'll give you a better sense of direction.
Yeah.
Okay. And so let me jump over in just a basic trade setup, because I'm going to ask a question to the YouTube world. I mean, aren't we all a little bit like John, where we don't want to just sit there and watch the market? It's kind of like watching paint dry, but we need to get into the market, place a few trades, and then that kind of sucks our attention to it, right? After we get a few trades on, now we're like, okay, now we're really trading, now we're focused. Now, some of us who might be more aggressive, intuitive, might need to jump into the market in order for the market to pull their attention to them. Some of us who are more analytical might be like, no, that's not how I trade. I have to make sure that my indicators cross this line, and I got to have this, and I got to have this into place before I even jump in and place a trade. Now, there's nothing wrong with either approach, but I would tell you this, and anybody out there, that before you even place a trade, you should do some set up rituals, some pre-trading rituals. And I'm gonna show you guys a little bit about what I do, and it might help you, John, to just get yourself acclimated to the market straight out of the way. And you do that every single time you're about to place a trade. Okay. Yeah. So we're gonna pause this. I'm getting a little bit better at this epic pin. I'm gonna take the eyeball, and we're gonna pause this, and I'm gonna jump over to Albion, but make this a little bigger. All right. So when let's see here. When people first open up Alveo, this is the screen that most people will see. So as soon as you download Alveo, and I downloaded it on this machine, and I wanted to keep it as raw as possible because I wanted to go through very first initial download. I download Alveo. This is what I see. Okay, I haven't made any adjustments to the Alveo chart at all. Before we get started down here, though, I'm going to jump over to YouTube and see if we have any questions. Let's see here. Looks like if you guys have any questions or comments, go ahead. And am I frozen in time?
We do have one question.
Okay.
From Howard Templehoff. He asks, what time frame are you using?
Okay. That's a great question, and I think he's asking John. Is he asking John that question?
Probably John.
Probably.
Go ahead, answer. What time frame do you typically trade?
What does that mean?
The what chart? 1 minute, 5 minute?
Oh, I think generally 1 minute.
Okay.
And then sometimes 5, but generally 1, I think.
Yeah, you do. So John trades just as I've seen him trade every single day. He doesn't sit and hold on to his trades very long. He's usually out of them before he ends the day at work. You don't hold them on to the next day. And so John usually trades the 1 minute, 5 minute chart as he loads up. And so this is going to be a perfect opportunity for us to kind of help you out, John. So brand new chart. What I do, and if you guys use the pivots, they're great. They're awesome. I prefer to use price action, and maybe we'll have a YouTube talking about these pivots because they are where I started, and they're a great opportunity to kind of get your feet wet and to kind of understand price a little bit. And I'll just quickly tell you that these pivots, these red pivots, are just a bigger move. So this is a pivot high, this is a pivot low, and the red means that it's going to move more aggressively than the oranges. So this is a major pivot high, major pivot low, minor pivot high, minor pivot low. So when you see a pivot form on the top, the next pivot will form on the bottom, which will give you an indication that it'll start to turn in that direction. Now the red means it's going to go for a longer period of time because we see a pivot low here. So we're going to go up until we see another red turn into a red. Now this one, if it continues to go down, this one could turn into our red pivot. But that's a quick little look into apiary pivots, which may help you to understand where the market could possibly turn and where the market could possibly turn to the downside or the upside. So what I do personally is I'm just going to go ahead and remove this for this discussion because I want to just totally focus on price action. So I remove those, plus I want to give myself a bigger view if I want to. So I'll go ahead and put 2,500 bars on this chart. And then you can see that that gives us a wide view. Now on the minute, if I were to take and look at this minute chart right here, aren't we more or less in a consolidation pattern? I mean, there's really no trend happening up or down. Would you agree with that?
Yeah.
I mean, it's pretty much sideways here. Nothing's going straight up, nothing, I mean, not straight up, but nothing going down. So this is kind of our box, if you will, of our trading zones. And so we would expect it to come down and hit the bottom part of this box, and we would expect it to come up and hit the top part of this box, but not necessarily break out because this is the range that it wants to trade in currently. And so maybe we can expect that for the next hour or so as we're trading in the markets. Right? All right. So I kind of pull out and look at a wide scope, but I always will add another chart to my trading, and I'll go ahead and add on the Euro USD, and we'll make that a 5 minute, and I'll add the same amount of bars, knowing that really the most influential information for me is and I put it over here because I do most of my trading here, but this is for my assessment of what it's doing. So now you look at it and you look, okay, I got 2,500 bars here, 2,500 bars here. In the 1 minute chart, we just looked and said, okay, it is more or less in a consolidation pattern, right? But on the 5 minute chart, same pair, would you make that same assessment?
No.
Why not?
Because it has a much more strong downtrend.
Yeah, so the bias is on this is more of a downtrend.
Yeah.
Okay, which is great. So if you're not looking at the 5 minute chart, you don't get to have that information.
Yeah.
If all you're doing is looking at the 1 minute chart, you're missing the whole story.
Yeah.
You're taking trading out of context. Does that make sense?
Yeah, totally.
And so just by evaluating what direction it is, now we have a directional bias, right? And so one of the recommendations that I often say is if you're just getting started in trading, remember back in school when the teacher would tell you more often in math class, when you're trying to learn a new concept, the teacher would tell you to show your work. Remember that? To always show your work. And why would a teacher ask a child or somebody to show your work?
Because if they get something wrong, then you can go back and examine the path they took that led them to that wrong answer, and you can find where they went wrong and probably why.
Yeah, and it's the same concept in trading. If we show our work to ourselves, then at the end of our trading session, we can go back and identify, okay, was I right or was I wrong? And that'll help us in our learning curve or expedite that learning curve so much faster if we can identify areas where I called this, but I was wrong. Right? And so we can learn from our mistakes. And if we make mistakes, but we don't have an opportunity to learn from them, then I would say that's a bad mistake. But if you make a mistake and you learn from it, that's a good mistake.
Yeah.
Right? So, so going back and just recapping real fast, basic trade setup. We're going to do 3 things. Okay? The first thing that I felt to do that I always will do is I'll check this economic calendar. So the first thing I do is I check the economic calendar and I ask, or I look and I say, okay, is there any news events that are going to be happening during my trading session? And if so, and I think this computer we installed a new computer and I don't think it has all the drivers. But anyways, so first, check the news. Okay, so 1, news. I'm drawing with a mouse. So 1, check the news, make sure that there's no major news events happening during your trading session. And if there is, maybe if you're new, maybe you should trade a different pair if that news event's coming on the euro.
Yeah.
Right? Don't trade the euro, right? Then 2, the second thing that I do in my trade setup is I look for a trend. Now, if we're just going to trade for the next hour, does the hour chart help us out?
Sure.
I mean, yeah, but
Yeah.
What would you think is the more prominent chart to look at if we're just going to trade for the next hour, within an hour?
Minute, 5 minute.
Minute, 5 minute. And so that's what I typically do is I'm going to do a short-term scalping trade. The 5 minute, sometimes the 15-minute will trade, help me to establish that trend. So I will always go over to the 5-minute chart right here and grab my trend line and go from this trend down to there, right? Really, I could kind of follow that trend. Does that make sense?
Yeah.
Now, the information that is closer to where price is going to be more influential than the information that is in the past.
Yeah.
Does that make sense? So what we do here is I create that trend line so that I know, okay, so we got a directional bias of a downward trend, right? And then I look and see where is price. Is price against that trend line? Or do I still have a little bit of room to play to get up into that and to before it hits that trend? Okay?
Yeah.
And then, so step 2 is trend. And then step 3, so it's a 3-step process before I place a trade, is know where my zones are. My trading zones, okay? So 1, news events, 2, trend, 3, zones, okay? And when you do it every single time, then you can get into trading a lot quicker, right? Because we just basically look at the news, check your trend, and then know where your zones are, okay? Your zones are where the market is most likely to change position, to make a decision, okay? And I usually put my zones up here on the 1-minute chart. So I look for my major support and my major resistance on my 1-minute chart. So this is my major support. And then I go through and I mark again, I got to go into settings because I just installed it. So enable continuous. I'm going to do that. We're going to enable one-click trading because I love it. And we're going to go 0.02. We'll trade that. 0.02 and 25 is kind of how I trade, just doing some scalping. Okay. So back to setting up my zone. So I know my major support, my major resistance. Would you agree with that?
Yeah.
Okay. So basically, it's going to take a little bit more out of the market to cross these lines than say this line or this line. Does that make sense? Even though these two lines right here are still considered areas in which the market may or may not make a decision. Okay. So I'm drawing my zones on all of my chart throughout. So these are my trading zones. If it comes down and hits this line right here, then I should probably say step 4, even though it's kind of a step, but I do it all the time. For me, step 4 is I kind of take a measurement or count my pips. So I'm going to go pips. See, pips or movement. Pip movement. Let's do that. Trying to figure out a word that's not so long. So I don't have to sit. Movement. So really, how much is the market moving? Okay. So that's my 4th step. So what I do for that is I just take this measurement tool, or if you're run a quick one, because I use this all the time, the middle mouse button. If you press in on the middle mouse button, it changes that measurement tool. Mm-hmm. So I'm looking at this as saying, okay, it's coming down into a decision point where if it crosses, it could continue to go down. But we're kind of far away from trend. You have another. You could say that this could be another establishing trend here, but we also have one coming up here, right? And so it's kind of forming a wedge or a triangle, if you will. And so I look at all this data and to see, okay, could it come down? Is it going to go likely to go up? And then I do my best assessment and take the highest probability to trade setup. So if I'm looking at this and I say, okay, is there 2 pip, because I go for 2 pip gain before it hits that next area of which it's going to make a decision. Mm-hmm. If the answer is yes, then I'm okay to make a trade. So I'm going to go ahead and get into a buy right here, and that's right where I want it to be. Okay, and I'm going to tell you the reason why I want it to be right there is because this take profit line is below this area, and again, this area right here could be an area of decision for the market. Right there, and I got my take profit line right below it. So it's more likely going to hit. Now, if the market does continue to come down, that's okay. Now I'm going to say, okay, I put one trade on. Not really, I don't have a confirmation that it's going to go up, but it could come back down. And I'm okay with that. If it does do that, I can put more trades on and have a bigger profit zone. Does that make sense, John?
Yeah, I gotcha.
Any questions up to the 4 steps? Any questions on the 4 steps of what I do on every single setup? So see, right now it just broke this little line, and so that is fine by me. Go ahead and break that line because now I get more of an opportunity to profit. So I will go ahead and place another buy right there, and one more right there. And I love the fact that this is below this, and so I'll take that and put that one there, and I'll probably grab this guy and move him down, this take profit, and move him down just a little bit so he's still in profit, not yet ready to give up on him yet. Mm-hmm. But I'm moving him down just a little bit to right under here. And so I would stack my trades on right here. Get into another one and another one, because I expected it to come down here, but now I expect it to come back and hit this take profit. So I always kind of get in early and test it, If it bounces down, I'm all right. Once it hits about right here, when it crosses over this area, then I'll have a major decision to make and say, do I want to continue on with this trade or reverse direction?
Yeah.
But if you see over here on the 5-minute chart, it kind of just went down to this uptrend and is putting pressure on breaking this little trend line. Our major trend is right here, and these are our minor trends on the day. You see that?
Yeah, I do.
So just by drawing on your chart and showing your work, you can kind of sort of start throwing away the garbage or the minutia that you really don't need to know, and start pinpointing where profitable trades are.
Yeah.
Does that make sense?
Yeah, for sure.
So any questions on that?
Not at the moment. This has been pretty helpful.
Okay, so one of the things that I saw that John was doing by watching one of his recorded sessions is that he was trading a different pair, but he wasn't looking at the whole picture. So over here, he had his 1 minute on the Euro USD, but if you fast forward just a little bit on here, he starts to trade the AUD, the Euro AUD, but he doesn't change this or look at this before he gets to into any trades. And so for me, not knowing the whole picture and trading on small picture is, well, this is my best guess.
Yeah.
Instead of trying to take an analytical approach or analyze the data and saying, which is the highest probability trade?
Mm-hmm.
Does that make sense?
Yeah.
And so if you approach the market and is always trying to find the highest probability trades, I think you're going to be better served for that, right? And then there's one last thing that I often always look at is where is buying pressure? Quick question. Do you know how, I don't know if you know this, so I'm just putting you totally on the spot. So a lot of people don't know this, but do you know what are some quick tools to determine what buying pressure is? In fact, I'm going to ask YouTube out there. Anybody know, if you're scalping, what are some quick ways to understand buying pressure based upon price? Without using indicators, what are some tools that you guys use to determine what if the sellers are putting pressure on the market or the buyers are putting pressure on the market? Any idea? Okay, that's a good answer. You want to look and see if anybody, since you're on the YouTube world, because YouTube's not working for me on this machine for some reason.
A lot of talking between them.
Good.
We have a couple questions if I'm going to go through them.
Yeah, let's go. So I'm going to ask YouTube if they know what are some good key indicators when you're looking at price to determine what pressure is being put on the market. So while you guys are answering that, I'll answer a few of your questions since I know we have a lag in here. So what are some questions that we got, Orlando?
All right, so you have a couple from Chaos Zero. I think that's right. I think he's talking about the beeline. He says, do we have to journalize our trades? That's part of the beeline.
Having a trade journal is definitely recommended. On the beeline, I think if you're talking about a specific requirement, it's not necessarily to journalize your trades, it's basically to write out a plan. And to put in your, just kind of similar to what I just did. My first thing is I look at the news, I trend, I drew my zones, and then I measure volatility. To me, that's my plan. That's my setup. That's what I do. And I go beyond that with risk versus reward. And for me, my risk tolerance level is I never, ever, ever risk more in one day that I can't make up in two. Okay. So if I'm going to have one losing day, how long is it going to take me to recoup that? And if it takes me longer than 2 days to recoup that loss, then that to me is more excessive than I like to trade.
Yeah.
Does that make sense?
Mm-hmm.
Hopefully that answers his question.
Hopefully. And there's another one for him as well. It says, when trading short term, like 1 to 15 minute charts, what kind of time frame should support and resistance be on? I'm not sure what he means by that.
When trading small time frames, I often will put support and resistance on the 1 minute chart because I'm scalping, so that's a small time frame. Okay. So I'm looking at Orlando to answer a YouTube question, so I probably should look at YouTube. I often put support and resistance on the 1 minute chart because that's where my entries and exits are. And so when I look to exit out of a trade, I want to know where that support and resistance is. And so I can put my take profits, like I was showing you right here. If I'm going to take, I'll put that take profit right where the next support or resistance line is. In this case, that's right where resistance is. And so I want to take it before it has to cross over resistance. And so if I put my take profits before it crosses resistance, I'm more likely to get them as opposed to putting my take profits on the other side of resistance, if that makes sense. So if you look at it like floors and ceilings, if you got to bend down and pick something off the floor, isn't it easier to grab it from the top of the floor than have to break through the floor to grab it, right? And that's the way you got to look at it. And and the major support and resistance, down here, this floor would be made of concrete, where this floor that it created right here is maybe made of bamboo, or even grass. You have a grass floor, and so it's like, okay, it's easy. I'm going to break through it pretty easy. But as it gets more data, it forms a solid floor, and the floor becomes harder to cross. Now, it would be advantageous for us to have our take profits on the top of the floor, as opposed to having that market have to go through the floor to get it. Does that make sense?
Yeah.
So,
I think there's one more. Joseph Jenkins, he asks, what other pairs move well after 9 a.m.? He says that Australia dollar, US dollar is pretty good, but are there any others?
Well, anything with U.S., you're going to find that are going to move, but also I would check the market news too, because sometimes the euro can move after hours if there's news events, right? I particularly like to trade. Somebody had a great question. I think I can't remember if this week or last week at boot camp, but they were trading for 2 pips, and they were on a different pair, and there was spread was like 1 pip, and they're like, well, why isn't it taking my take profit? It's on the other side. And I'm like, well, you got to account for the spread. And so I like trading the euro US dollar because you got a small spread right here. But if you go to a different pair, let me just change this guy right here. If you go to a different pair, let's just say Aussie New Zealand, now our spread is 1. So we got to go 2 pips plus 1 to cover that spread. And so when you're scalping, I'd much rather take 2 pips when it becomes 2 pips than have to wait beyond my take profit of where I have it set. Now, there's nothing wrong with trading these pairs. I would just be very, very cognizant on your spread and make sure that you're trading pairs that have low spread if you're scalping. And so hopefully that answers that question. But great question, so keep them coming. So I'm going to ask Orlando here real fast. Did anybody answer my question that I threw out there? Anybody have a comment on that question?
What was your question?
My question was, how can you, what are for some good indicators on price to find where pressure is? And if not, that's okay. Because that means I know something you don't know.
Someone says look for wicks. Someone
Perfect.
Diminishing candle.
Who said look for wicks?
That'll be Bucks Groveler.
You hit the nail on the head right there.
Bob Atkins.
Okay, perfect. I love looking at the wicks because the wicks are a good indicator as to which way pressure is forming. Okay, and so if you look right here in this area, I'm gonna make this smaller. If you look right here in this area, in this zone right here, we have a lot of wicks that are forming on the top. There's a top wick, there's a top wick. Even though there's a bottom wick on here, the top wick is larger. Okay, top wick, top wick, top wick, top, top, top. If we get a lot of wicks on the top that are forming, that's a good indication that the market pressure is starting to come to a downward. That the sellers are trying to push the market down, right? Even though they're not successful, at some point the buyers are going to back out of the market and the sellers are going to start to take over, and you see that happen right here. And so I often will look at the wicks and say, okay, we got some bottom wick here, bottom wick here, bottom wick here, bottom wick here. bottom wick here, I'm expecting a little bit of a pop up, and I might have just had it right there and I wasn't looking at it. But typically if I trade and I see that pop up, I will close out of my trades and make 1 pip, pip and a half, 2 pips. It doesn't matter to me. What matters the most is that I get out of these trades and have opportunity to place more trades, reposition those trades to a better spot. But if I start seeing wicks on the bottom, then I'm looking for a little bit of a pop soon to happen pretty soon.
Yeah.
Does that make sense?
Uh-huh.
So I do look at wicks quite a lot. But good job, YouTube. You guys got that right. You guys get 50,000 points. Don't spend them all in one place. All right. So John, let me ask you, sitting down and talking about this, do you have any questions about what we talked about, or do you have any questions about trading in general that you may be like, you know what, I don't know why it does this when this happens, or anything like that?
Not really at the moment. I think the kind of mindset and mode that I'm in right now is like, wow, I just learned some good fundamental kind of stuff, and I want to get back in and trade and implement what I've learned as quick as possible and see the effects that it has on my trading. Because I have really good days and I have really bad days, and I think implementing some of what you've taught me here is going to help level me out and make me more consistent. So I'd be curious to do this again. I don't know how soon or later you'd like to do it, but I'd be curious to see the kind of improvement that I do experience as a result of this.
Sure. And so like right here, that's close enough to my take profit that I'm just going to bow out of these, right? I don't have to be greedy and say it has to hit my take profit. I just got to be profitable on those trades. And there was there was a few, or there's one trade in there that I wasn't profitable on, but that's okay. Yeah, see, I lost 60 cents on that, but I won 80 cents, or not 60 cents, but 0.60 pips, but I recouped it with the 0.8, right? And these trades negated that loss. And so that's the way I always look at it with ratios. And I'm not really trading, one trade. One trade is not make it break it for me. If I have one trade that's negative, do I have 2 or 3 on that are positive, that are helping mitigate the loss of that one trade? And so I look at it in terms of where the losses and where the profits are going to be, right? Any other questions out there in YouTube before we wrap up? But basically what I wanted to show you guys today is just getting back to the basics. Look at your news if you're going to trade that session. Watch your trends, pull out your view, look at your historical view. Always, if you're going to trade the 1 minute chart, have a 5 or a 15 up that you're going to see those trends, right? And then draw on your chart for your zones. Where is the market most likely going to have opportunities to make a decision? If we determine where that is, then we should be trading. We should not be trading in the middle of that. We should only be trading where they're making a decision, and then measure, do I have enough movement? Like right now, I wouldn't be trading this because, I mean, every candle is just moving less than a pip. So this is like garbage when it comes to volatility, right? You can't really make a whole lot, and so I wouldn't necessarily be trading this right now, this pair.
Yeah.
But I wanted to show that because I love this pair because of the spread. Some really good pairs that have low spreads. Obviously, Euro US dollar, Euro JPY has a good spread. Dollar pound has a good spread. Any of your majors, really, any of your major pairs are going to have some good spreads. USD, JPY. When you start getting out of the majors, that's when you can start seeing your spreads start to increase. And I never trade between the 3 and 5 hour, 3 o'clock hour, 5 o'clock hour, or right when the U.S. market closes. So that's when spreads just go crazy. When all the banks are shut down, you don't trade, you hold on to trades, but I never get into or out of any of my trades during that time frame. Any other questions before we close up, Orlando?
There's one here from N. Mendez.
Okay.
He asks, or she, don't wicks mean that level support or resistance is getting weaker, or is that only in a range?
Yeah, you're gonna have to clarify because if you say does wicks mean support and resistance are getting weaker, I think that just depends on where those wicks are forming. But like if you're talking about in this area right here, you can see that we have a little bit of a consolidation and we're going to get a breakout anytime soon. I kind of anticipate if I were to project, I would say we're going to get a breakout to the bottom and it's going to come down into this zone. But my wicks don't necessarily correlate, tell me that I'm going to get a breakout. I got my trend here, a little bit of a trend on the down. And if I come down into that area, it's still following the trend analysis. And so my wicks will kind of help me to tell me where pressure is forming. Again, I want to make sure that these are not all 100%. This is just all the information that I can gather will help me make my best, highest probability trade, right? And so if I'm able to make the highest probability trade and it goes against me, like you saw the first trade, it went against me. But that's okay because I just moved that down into a losing position and I placed more trades on to recover from that loss, right? And so it's not uncommon that I'm trading with 20 or 30 trades for me, but I'm still trading the same quantity, overall quantity size that I would trade. So what I mean by that is if I'm going to trade a max position of one lot and I'm going to trade a full lot, I may break that up into 10 trades by 0.10 or 20 trades of 0.05, or you get the point, you know, or 100 trades, you know, and I tend to go for the 100 trades, so or the 50 trades of 0.02, and then if I get into my position a full lot, so if I trade with 0.02 trades, every single trade, and I get up to 50, that means that I'm getting heavier. When I get my position size is at right position size right here, shows me that I'm at one lot or 50% of what I can trade with, then I start looking to get to lighten my position. But I put a ton of trades on because I know some are going to lose and some are going to win, and I manage my losses with my take profits. So, again, great question. I think we're going to go ahead and wrap up. Maybe one more question if we don't have it. Or John, let me have you give me some feedback on what you learned today and what are some takeaways from this discussion today.
Use your 4 preparatory steps. Make sure that I've got a small context and a large context chart up like you have here. Pay attention to wicks.
Yeah, I think if you do that, your overall trading will start to become. But I also want to tell you that if you do this and you lose, so let's say I do this and I'm like, okay, I've analyzed all of this data and my highest probability trade is this, and you place that trade and you lose, go back and find out why.
Yeah.
Because it's going to happen in the early stages. You're going to lose. And then you're going to go back and say, oh, because I didn't see this trend, or I didn't look at the news, or I didn't do this, or whatever, right? But go back and figure out why you took a loss on that trade when you thought this is the highest probability and it didn't execute.
Yeah.
So try to figure out, it's almost as important as learning how to do it, and learning why you didn't do it correctly. That'll propel your learning curve so much faster into the future. Does that make sense?
Yeah, for sure.
All right, YouTube, hopefully you guys learned something today. Or if it's a great refresher course, just if you're struggling in the markets, just go back to the basics, because the basics is your foundation. You guys got to where you're at by doing the basic foundational trading. And so if you struggle on that, go back to the basics. If you're struggling to have a step-by-step process, maybe I've helped you just further your knowledge just that much more. So I appreciate everybody tuning in. And with that, if you like, subscribe, comment, whatever, you know, all the stuff that they always say on YouTube. We're no different. But anyways, appreciate you guys tuning in to this latest episode of YouTube Live. And with that, we'll go ahead and end it. Thanks, guys.